All right, we're good to go. Thanks everyone for being here tonight on a beautiful Wednesday or Thursday evening, mixing the days. It's scorching hot in Toronto. I don't know how is it in Edmonton, but it's super hot in here, kind of like the market in Edmonton. So yeah, we have an amazing session for you tonight. We have an awesome guest, my very good friend Aurora from Edmonton, from Waymaker Developments. And she's going to talk all about seizing opportunities in the hot real estate market in Edmonton and her insights for developers and investors. Before we start, it's a bit of a housekeeping items. So the most exciting part of the night, no, just kidding, the disclaimer. So all the information provided here in this meeting is for educational and general information purposes only and does not constitute investment or professional advice or offering of securities. HDBC Group and myself, Ali Nazarian, do not endorse any products, persons, or investment opportunities. Participants are responsible for obtaining independent legal, accounting, and financial advice from licensed professionals before making investment decisions. Okay, so for those who are new in this group, the Housing Developers and Builders of Canada, or the short form HDBC Group, is a group I started in February 2021. It's almost 3.5 years that I've been running this group. The idea was to foster conversations and sharing of ideas, resources, and knowledge for those involved in land development and building houses in Canada or interested to get involved. From beginner to seasoned, we have had many sessions. We have been running these monthly meetups since January 2022. So it's been almost 2.5 years that we have had this every month. So thank you for those who keep showing up and they're not bored. And you know, this is also thanks to our guest speakers who bring a lot of value to the group. A little bit about myself, for those who don't know me, I'm a real estate investor, developer, and coach. I'm very passionate about growth, creativity, and sustainability. I started investing in 2016. Actually, I was living in Edmonton between 2014 and 2016. And that's where I got my very initial land development education was from city of Edmonton when they were doing their blanket rezoning that a lot of cities are following now, but they really started doing that in 2014, 2015. And they were putting out a lot of educational material about how to do severances or infill developments and things like that. And that's what really piqued my interest. And so eventually in 2017, I started Ecolux and bought a piece of land and started building. And so the rest is history from there, as they say. I've worked as an engineer, project management, and risk management spaces for over 13 years. But now I'm a full-time real estate investor. So our guest speaker tonight, Aurora, is a seasoned real estate investor and developer with a decade of experience transforming Edmonton's real estate landscape. Renowned not just for her strategic acumen in deal making, Aurora excels in seeing endeavors through completion by bringing a team together. She's absolutely amazing. Anyone that knows her, she's so friendly, so awesome, and she has been doing really, really cool projects and very successful in that space. So I don't want to read through this. I'll hand it over to Aurora to introduce herself and basically share her presentation with us. Thank you, Aurora, for being here. I know you're super busy with all the projects you got ongoing in Edmonton. So thank you again. The stage is yours.
Awesome. Okay, well, hello, everybody. My name is Aurora DeLeon, as Ali has said. I'm excited to be here today. I'm actually, what I'm nervous about is the technology, because Ali's having had some hiccups there, and I'm starting to have some hiccups. But nonetheless, I'm really thrilled to be here. I think I only know 2 familiar faces, actually. So Imelda and Strahi. But then, oh, and then Hamid's here too. Awesome. But then for the most of you guys, I don't know if we've had the opportunity to meet, so it's always nice to have the opportunity to meet new faces, new folks. I'm assuming most of you guys are from Ontario. Is that safe to say, Ali, or it's kind of like,
No, I think it's all over the
oh,
place. I think Audrey
okay.
is in Winnipeg.
Oh, Winnipeg used to be my old stomping ground, eh? So, I graduated from the University of Manitoba, and I went to Sisler High School, if you know where that is. Anyway, okay, without further ado, I'm actually going to try and figure out how to share my screen. I had it all sorted out earlier. Okay, let me know if that's working out. You guys see that?
Yeah.
Okay, fantastic. And I'm just going to make some adjustments here so I can kind of see my notes. All right, so I know Shrahi is from Edmonton. Imelda is, I don't know where Imelda's from now. Imelda's kind of like all over the place, but she has some investments here in Edmonton. And Hamid and I actually do have a project together in Edmonton. Yeah, so as Ali said, we're going to talk about Edmonton for the next 25 minutes. But show of hands, like who here knows a little bit about Edmonton or have actually started looking at Edmonton if you're curious. You don't have to go off camera. You can like raise your digital
The
hand.
reaction button at the bottom.
Yeah. I'm curious. Okay. Nobody.
Yeah,
Oh
we got
no, a couple
yeah.
of people. Oh, a few. Awesome. Okay, really, really cool. So that's what we're going to talk about today. But I can't talk about Edmonton without obviously talking about the Edmonton Oilers. That's right. That's one of the things that we're really, really famous for. Over the last few weeks, it's nothing but the Edmonton Oilers, and I'm going to showcase a little bit of that. So this is me and my family. So this is my husband. His name is Aldrin. I got two boys. So this is Isaac. He is only 15, but he is way taller than dad, eats a lot. That's part of the reason why I do real estate is because I got to feed my kids and it's really expensive to feed boys. And then this is Nico. He's 11 years old. And this is us celebrating the Oilers win at the Moss Pit. And this was against the Dallas Stars. A little bit more about Oilers. So this is us at the MOSFET. If you guys are watching the news, you see how crazy Edmonton Oilers fans are. And this is me and Mayor Sohi, actually. So that's the city of Edmonton mayor. He's out there partying at the tailgate party. And of course, we're talking about the Oilers, and we're also talking about my other favorite topic, which is housing. So on to Edmonton. Ali did mention a little bit about myself, so I'll just give a little bit of a breakdown. So yeah, I've been local to we're originally from Winnipeg, but I've been here in Edmonton since 2007. As investors, we've been investing in this market and area for the last 10 years. Over the last 3 years, we've really shifted to just a focus on development, and that's kind of just been our hyper focus in Edmonton and the infill development strategy. And hopefully, today you guys will see why. You met my family, or you saw the photo of my family, and we started out with just singles, really, turnkey property, continued to build our portfolio little by little. People just kind of got curious to what we were doing and then organically started having joint venture partners on board. And over the last 2 to 3 years, as I mentioned, it's really just been hyper focused on development. And I think that's quite attractive for a lot of investors, both locally to Alberta and from coast to coast. And again, hopefully this presentation today kind of, opens your eyes a little bit more about the economic fundamentals of Edmonton and why it's a great idea. And yeah, I've got a team here. My builder that I have, we've known each other for 8 years. He actually designed my primary residence basement. So we go ways back, and yeah, very, very proud of the team that I have and wouldn't be here without them. Okay, so that's a little bit about me. So Edmonton. I think Edmonton, if you've been an investor probably in the last little bit, Edmonton has definitely been a buzzword, or at least in your radar of markets to check out. And the first few slides, I'm gonna, just like Ali, my disclaimer is I'm not an economist, I'm not a broker. However, these are fundamentals, like economic fundamentals that as an investor, as a developer, I definitely keep an eye on. I definitely keep a pulse on. And instead of kind of like spewing rhetoric to you guys, I thought, okay, I'm gonna come out with some data to show why Edmonton is a great place to be. So first one is population growth. I think if you live in Canada, you would have heard that there has been a huge surge of people moving to Alberta. And this graph is very, very recent, actually. This shows Q2 data of 2024. So the blue line here is the Canadian population growth year over year, and the orange line here is Alberta. You will see that we are above the Canadian population growth percentage change year over year. In the last year alone, we've seen 200,000 people move to Alberta, and that's a record-breaking number that we're seeing here. You'll see people are moving here, and I think I had the number here. Just where is that my quarter number? Anyway, I may not have it here, but why people are moving here? People are moving here because of jobs. People are moving here because of affordability. And then because of COVID, what we're seeing is actually a new trend where people are coming here because of the fact that they can afford the cost of living here, but maintain their jobs elsewhere in Canada. So the narrative as to why people are moving to Alberta is a little bit different than what we saw in 2006, 2007, or 2013 and 2014. So it's going to unfold today, hopefully, in the conversation, and you'll understand why. Now, this is another fairly recent data today, and this is from ATB Economics. If you guys are wondering where it's from, happy to share some of the sources later on. But if you're wondering where are these people coming from, so the orange here is interprovincial migration. So a lot of folks that are coming here are coming from BC and Ontario primarily. And then we also have international migration here. The light blue color is just natural increases. That's the other thing about Alberta. Demographically, we're one of the youngest population in all of Canada. So you will also see some natural growth in population because of that younger demographic. But that is a big indicator where you're looking at where to invest is where people are, because primarily our business model is we provide housing, and you need people to provide housing too. And the other thing that I look at is the drivers, like what drives economic growth. And interestingly, I know probably in the last, I still kind of get it when I talk to people from Ontario, from BC, or from other provinces. They'll say, "Oh, you invest in Alberta. Isn't Alberta like a boom and bust? Isn't it just like all about oil?" And notoriously, I think there is accuracy to that, certainly, because 2006, 2007, Alberta was calling, and it was all about the oil and gas industry. But now that has shifted as well. But here's the interesting thing, just because it shifted, the narrative has shifted, oil and gas is actually still one of the largest sectors in Alberta. It's not the only one, but it is still a big part of our industry. So this was what? April 3rd, 2024, Alberta sets another record for oil production as Trans Mountain expansion opening looms. And it actually just opened last month. The pipeline to the west. So, oops, wrong. Okay, there we go. Here's the slide, and I'll just show you guys. We are producing more than double of the oil that we were producing in 2008. So that tells you, and I don't know what side of ESG you are, And to me, just the point I'm making is it doesn't really matter. It's not going anywhere anytime soon. And it is still one of the industries in Alberta, in Canada, that is actually one of the biggest drivers in our GDP. So with that pipeline expansion that just opened last month, May, we're actually going to see that increase in production capacity to up to 3 times, from like $300,000 barrels per day to just under 900,000 barrels per day. So it is still a significant part of what's pushing our GDP production here in Alberta. Now, but what else is there? Is it still just oil and gas? The answer is no. And this is probably the narrative that people don't really know about Alberta, is that Alberta is actually a tech hub. And I don't know if you guys know that. I've been here and I didn't actually realize how big we are on the national stage and even on the international stage. So when we say technology, we're talking about hydrogen, we're talking about biofuels, we're talking about carbon capture. So Edmonton is actually a global leader in clean energy technologies. And the Edmonton region alone is leading Canada in clean energy technology. We're looking at projected investments of about like 30 billion by 2013. And we are the largest hydrogen hub in all chains of that, that value chain production in Canada. I'm not going to go, you guys can do your own kind of research. Again, I'm happy to share this and you'll be able to find where the sources are. But in Edmonton alone, we've held the Canadian Hydrogen Conference for the last 2 years, and that's attracted like global minds and researchers to come to Edmonton because of the world-class hydrogen research and facilities that we have here. The Carbon Capture National Conference is happening here in September in Edmonton, 2024. So aside from oil and gas, the derivatives from that and the driving force to clean technology or clean energy is also happening here in Edmonton. And it makes really good sense, right? Because the proximity to it is right there. So that's another really cool thing about Edmonton that I don't know many folks are aware of. We're not going to go through all the other industries, but we also have agriculture. We have, other, in Edmonton, there's government as well, but we're not going to go to that rabbit hole. I just want to let you guys know that it's changed from what people are like associate Alberta just as purely oil and gas. There's certainly a lot more diversity, and we are actually leading a lot of these industries in Alberta and in the national stage. All right, so with these industries in different sectors, obviously we do expect employment growth. And without going through all of this, you'll see that, again, this is Alberta. The blue is Alberta, BC is yellow, Ontario is orange, and the Canadian percentage, or the Canadian line, is this black one, I think. And you see Alberta again leading the pack there. So we talked about population growth. We talked about the diverse industry and the different sectors we have here. We talked about job growth, and now we're talking about income. So that's the other super unique thing about Alberta, is that, so this was just published. Oh, this is from Stats Canada, so they don't have a lot of the most up-to-date data, but this is from 2021. Published last year. You'll see here, so these are the provinces that we have, and this is where Alberta sits. So Alberta's median after-tax income in 2021 was 77,000, and compared to, and Canada averages at 68,400. And if you compare it with the rest of Canada, we are at the top. The next in line here is Ontario, but as you guys know, the margin, the spread between income and cost of living between Alberta and Ontario is quite significant. So this is another good reason why you'd want to be in a province where people are getting paid higher. Now, the next slide, which I think really is Edmonton's story, is our affordability. Now, this was as of April 2024, and I took this from CREA, so you guys can just look it up yourselves. So it highlights the major cities across Canada. And if you look at Vancouver, which is our neighbor to our west, we're looking at average prices of 1.3 million. If we look at Toronto, we're looking at 1.15 million. Winnipeg, you said, I think you said one of you guys are from Winnipeg. So yeah, Winnipeg, you and Edmonton, we're not too far. We're looking at 406 in Winnipeg. Now let's focus in on Alberta. Edmonton is sitting at 431K, which to me and Imelda is probably, and Ali, because you were here not that long ago, it's probably astounding for us. We're like, what? I remember buying houses in the, with a price tag that starts with the number 2 and townhouses that start with a number 1. And now we're looking at average home prices sitting at like 431. And here's the other even more astounding data is that if we look at Calgary, which is a really good city to benchmark Edmonton against, is sitting at like 608K, which is unreal. Now, the thing about these two cities is that they actually do mirror each other quite closely, except that Edmonton lags by, and you may or may not have heard that, lags by about 12 to 18 months, or some people will say 18 to 24 months. And this next slide is what gets me all excited, to be honest with you, about the affordability and the easier entry to the Edmonton market. So this is older. I couldn't really find something that was a little bit more recent, but this shows data from January 2005 to May 2023. Now, this is the Edmonton versus Calgary home prices. And the blue line here is the Edmonton average home price, whereas the orange line here is the Calgary average home prices. And you can see the trending like over time is that they do follow that same pattern in terms of when Calgary peaks, you'll see Edmonton do the same. When it dips, does the same. I don't have a crystal ball, but again, Calgary is a really good point of reference for what we anticipate to happen in Edmonton. So this spread here, which that ridiculous spread that I just mentioned to you guys earlier, 431 average home price in Edmonton, Calgary 608, given time, anywhere between 12 to 24 months, that's the same pattern that we typically see in Calgary. So again, you don't have a crystal ball, but with conviction, you could say that is just an amount of time that will happen in Calgary. And I actually wanted to test that, not that I really needed to test that theory out, but this is a really easy one to point out just because of where it's at in this particular graph. So here, I think this is like March 2019. Average home price in Calgary is like 400K, like right on the money here. And then Edmonton hits 400K, and that's around September 2021. So that's like 19 months right there. So that's what gets me excited, because I'm like, okay, I can kind of anticipate what's coming, but my entry point in Alberta is still quite affordable. I see Munaz, do you have your hand up, or is that just like a residual from earlier?
Yeah, it might be residual, like probably forgot to lower his hand, but yeah, we can take questions at the end.
Okay, perfect.
Yeah, people can get questions in the chat and then we'll get them answered at the end.
Okay, perfect, because I have no idea what's happening in the chat, just so you know. All right. So then the other thing that you guys are probably wondering about are rent rates. and vacancy rate. So this is from just the CMHC report they published January 2024, so fairly recent. But just in the last 6 months, we've continued to see even an increase in our rental rate. So purpose-built rental, because that's what we're going to be talking about mostly today. We're seeing a vacancy rate of about 2.4%, and an average 2-bedroom rent is just under $1,400 per month, which is up by 6.4% from last year's numbers. So this is, again, a really good indicator for if you're looking at a market where to invest in. The other thing about Edmonton, and Ali, you know this, and Imelda and Shahi, is that we don't have any rent caps. That's the other thing, is that we can actually we can rent properties according to market rent. And I'll talk a little bit more about like our affordability benchmark, but this is another advantage that we have here in Edmonton, in Alberta, I should say, as well as the fact that our residential tenancy laws are, I would say, quite fair, where if you breach your agreement, even though you're the tenant, you actually still have to face those consequences. So I hear about what's happening in Ontario, I hear about what's happening in Quebec and BC, and I'm just like, oh my gosh, I don't know how you guys deal with it. Here in Alberta, like I said, we have fair tenancy laws both for tenants and for landlords. All right, so we talked about the fundamentals. And I hope that kind of just like opens your eyes about, okay, if I'm looking at a market of where to invest in, what are some of the things that I need to, like, these key drivers to look at and why I should, put my money there. Now, because we're in a group that is either developers, builders, or aspiring developers and builders and investors, I want to focus in on now. That's fantastic, but how is it like building, or how is it like developing in Edmonton? Like, am I gonna like see all my hair turn gray? I'm gonna have wrinkles and etc. It's definitely not a perfect process, but I want to shed some light as to some of the changes that's just happened as of late, as well as some of our process and timelines here. Okay, I'm gonna preface this by just ignoring this box. I totally forgot to delete it. I want you guys to focus on this instead. So Edmonton bylaws, and Ali kind of mentioned that, that's kind of where he learned a little bit about land development. So as of January 1st of this year, our bylaw, our city bylaws here in Edmonton actually has changed, and we city council passed basically blanket rezoning, allowing for what used to be the lowest form of residential zoning here to now allow 8 units to be built on that parcel of land and up to 3 stories in height. So that is pretty significant, because it allows us developers and builders to bypass that rezoning process, buys us time, gives us less time to go through all of the red tape and that process. And it also speeds up the permitting process, because along with the bylaw changes, they've also made some changes on some setbacks and some of the rules that they had before. So the need to request for variances have also decreased, again, speeding up your permitting process. Now, okay, so rezoning timelines. There are still situations where you'd likely want to look at getting a piece of land rezoned. And I hear a lot of woes from people in Ontario, from people in BC, and they're like, oh my gosh, my rezoning, it's like 2 years now. I haven't even, I have no idea what the heck's happening with it. And this is real time. I took this from the City of Edmonton website, and tells you kind of where things are at. So this is for Q1 of this year. So if you're looking at non-complex rezoning, the target is 90 days. They are sitting at 151-day average. So yeah, they're not meeting the targets, but heck of a lot better than Ontario and BC. That I know for sure. And Ali's smiling because I know some of Ali's stories about his rezoning projects. Complex rezoning, you know, they're saying our targets are 160 days. We're at 171. So that's not bad at all. Now the permitting process, and I'm looking at new construction. So looking at, this is like your minor development, more like residential, and this is more your commercial, industrial, mixed use type of timelines. Again, I took this from yesterday. Let's focus on this one. So infill development permits. The target is 40 days. Ali, 40 days to get a development permit. Ridiculous, right? Although we're not there, we're at 80 days. That is still not bad. And recall, this is from January to March of 2024. We just changed our bylaws as of January 2024. So there's going to be a transitionary period. People were like, you know, it's a new process. There's a learning curve, et cetera, et cetera. So over time, I foresee that these averages are also going to start to get closer to their targets. Building permit, their target is 35 days. We're sitting at 44 days. So that's not bad at all. Anything that is like 8 units and up, or require a bit more complexity is gonna obviously require more time, more days. There's a lot more review. There's a lot more back and forth and a lot more requirements. But these are, like, again, if I were to compare different municipalities, Edmonton is like leading the pack. Even when I compare it to Calgary. So anyway, here I'll share this with you guys later on, but not going to belabor it, just to say that we're awesome. Our City of Edmonton team here is awesome. This is building and trade permit inspection scheduling time. So if you want to schedule an inspection and the time that your inspector actually shows up, building structure, 2 business days. HVAC, 1 business day. Electrical, 1 business day. Plumbing and gas, 3 business days. And this is published in the City of Edmonton. So you want to see if they've picked up your file. If you submitted June 19th, you know, you'll know that in about 3 business days, you'll have someone appointed to that application. So from that perspective, for builders and developers, you know, the process is here. So from an economic perspective, we already covered that. Like, we're like, yeah, Edmonton is good. Now I'm a builder, I'm a developer. What is the barrier? Like, how difficult is it to get something like this going in Edmonton? Again, it's not perfect, but if we were to compare it to other municipalities, Edmonton is a pretty great place to look at building, because we've got bylaws that are aligned, we've got council and city administration that is in support of densification, and that's why we're seeing process, policies, bylaws align. Now I see Ali like trying to like squint and take a look at the graph here. I know it's small, but again, I'll share it with you guys, and then you'll have the opportunity to go and look at each line item. But basically, I took this from the Altus report. I don't know if you guys know, but Altus Group actually does a report each year. It's called the Canadian Cost Guide, and this is from 2014. It kind of showcases kind of what the average price for construction for some of the major cities in Canada. I don't know if I can zoom this, but regardless, I'll read it to you guys. So this is Edmonton. And for what I do, which is 8 units and up, it kind of falls under this stacked townhouse category, even though I know the verbiage and the language differs from municipality to municipality. But you're looking at an average cost of anywhere between $195 to $245 per square foot is kind of what you would expect based on Altus's report from last year. Calgary and Edmonton, according to the reports, are actually about the same range. Vancouver is $220 to $300 per square foot, and the GTA sits at $240 to $275. Now, I don't, again, it probably is such a wide spectrum of data that they collect, but I can say in Edmonton, like, this is fairly accurate. And again, it will depend on your build, it will depend on your design, it will depend on your materials, a lot of variables, but this is what it looks like in terms of per build for costing for us. Now, I'm going to wrap it up because I think I'm taking too long.
No, it's okay. I think we still have some time. Don't worry
Okay.
about it. I'm sure everybody's enjoying this, so this is great. For those who are interested, I just put the link to the report that Aurora just talked about, the Altus cost guide. I just put it in the chat.
Okay, amazing. Yeah, yeah, it's actually a pretty good
Yeah, those
benchmark.
numbers for GTA, definitely not that. It probably starts at the high end of it.
Yeah, like you're starting at like where's the GTA, like 275 and up
Like
per square foot.
I haven't heard 275 for a long time, like here.
Oh,
But
wow.
I
Yeah,
guess if you're building like volume, maybe you can reach that. And that's the didn't mean to turn this into a conversation, but that's the thing with this is that a lot of the numbers comes from the what they call like production houses.
right.
Like those were building like two, 300 at a time. So the prices are more for high volume. But
Exactly. That
good
makes
to know
sense.
that Edmonton is more accurate in your experience.
Yeah, I would say so. I think we're within that range. Imelda maybe can chime in later on about Calgary because I do think that in just conversations with other builders and developers in Calgary, definitely there is a price difference between Edmonton and Calgary, and we can get into a little bit of that a little later on. So anyway, that is kind of what I wanted to share with you guys because now that I presented all this data and this is the information that I have, the question that I had was like, okay, now that I know all of this, like, what are we doing about it? So I have the unfair advantage of being in Edmonton, great market, as we talked about, from bylaw and city administration support. Again, I've got that unfair advantage as well. Our processes here are supportive of densification. As far as costing goes, in terms of construction cost, we're still within, I would say, like feasible range and reasonable range for project feasibility. What am I doing? I'm obviously going gangbusters, building a lot of these multifamily infill projects, and Hamid will know this. So I'll share with you guys a little bit some of the projects that we have. So this is an 8 unit, and as I mentioned before, we do 8 and higher, like 8 and above. I don't do anything less than that. Just from a feasibility perspective, it doesn't work as well. And we do infill developments. And for those that don't know what infill is, basically is just you knock down an old house and you fill it again, so infill, with new construction or new development. And because of that bylaw in Edmonton that allows, these parcels of land, so long as you have the right size, there is still a size requirement, you're able to fit a minimum of 8 units. And for us, we have, if you're wondering where the 8 units are, so you've got 1, 2, 3, 4 main floor units, and then you've got here in the basement 5, 6, 7, 8 units. And you won't see it on this side, but we actually have also 4 single car garages on one piece of land. And the land, this particular size is a 50 by 150. And it's a corner unit, and that's enough for you to fit or to build 8 units there. We are financing it primarily through the CMHC financing program, the MLI Select. Again, you may or may not know about it. I'm not a broker, so I don't. I mean, I've gone through enough of these mortgages to let you guys know it's a pain in the ass. Like, there's no other way to say it. It's not the friendliest process. However, they are honestly offering the best terms to date, so that people like you and I, we're not big time developers, could get a piece of the action and could do these types of longer term investments. We always, thus far, we've gone through the affordability stream without going down the rabbit hole of CMHC MLI Select financing. basically you have to meet certain criteria for them to give you the best loan terms. And for us here in Edmonton, it makes sense for us to go down the affordability route, because our affordability benchmark here is $1,665 per month. And CMHC doesn't really dictate what type of unit you need to rent at that rate, just that you have 25% of your units be designated as affordable. Now, these basement units naturally fall under that 1665 benchmark. So for us, without really giving up, without leaving any money on the table today, we can easily meet these affordability criteria and get our projects approved through CMHC. Yeah, we are also incorporating some energy efficiency points. And anyway, that's probably for another discussion. For us, this is long-term play, and we are in it for holding these rental properties for long-term wealth building. This is another project that we have. This one is an inside lot now, and this one has 8 units as well. And we were actually one of the first ones to build in an inside lot before the bylaw was approved. It was a little bit of like gutsiness, and at the same time, I think that like, sure, we can figure it out. And thankfully, it did work out. And this is very striking in that particular community. I'm actually going to see if I can find, I feel like I had these things ready. I was going to show, oh man. Okay, maybe not. Actually, let me just find if I could show you guys. Oh yeah, this is a video. Sorry, it's going to be a bit loud. This is what it looks like in that community. I'll try that. I'll show you that again. So how the 8 fits is it's actually like a back-to-back duplex. So, or semi-detached, whatever language you use. So you have duplex at the front and then duplex at the back. And then if you notice here, you have a basement suite here, a basement suite there, and on the rear, there's also 2 basement suites. That's how we have the 8 units as well as 4 single garages at the back. Now to get back to my slide. Oh, here we are. Hey, so this is another one in Glenwood. This is on the west side now. The other 2 are in northwest side of Edmonton. This is in West Edmonton, fairly close to the mall. This is another 8-unit corner lot that we have. Really cool design. This was I think this was a month and a half ago. So I have other updated pictures there. And then this is another project that we have in Crestwood. Crestwood is a luxury community. I don't know if you're familiar with that at all, Ali, but it's on the west side as well. But so we decided to build 3 stories here. We waited until the new bylaw came because we didn't want any variance requests. We didn't want to wait for the neighbors to A-OK our projects. We waited until January 1st. January 1st submitted that that permitting project, and here we are. We're building. This is again from I think a few weeks ago. We're now finishing up framing the 2nd floor, and all the projects that I'm highlighting here today are projects that are funded through CMHC, and our takeout or term out loan will also be through CMHC. As far as the loan to cost, they're anywhere between 90% to 95% loan to cost is what we've gotten for our COIs. So yeah, like I said, this is all that we're doing. We're doing this for our own portfolio. We're doing this for other investors that want a piece of the action. Now, CMHC isn't all that it's cracked up to be. The numbers that I mentioned to you guys earlier, the 90 to 95%, that just means that that's the percentage of the loan that they've approved us for. but you have to remember that those are high leverage loans. So it's another conversation that I won't go down the rabbit hole today. But yeah, like I think for us, we think it's a really good program still to utilize while it's available, and for us to continue to building these types of projects in Edmonton. But we're also careful knowing that it is a highly leveraged loan, so we have really good reserves, or the plan is to have really good reserves for these types of projects. But I'm going to go into my last slide. Again, fitting way is to end with another Oilers photo. That's me and my family. If you have any questions today, I'm glad to answer hopefully most of them. Otherwise, you can contact me at info@hssedmonton.com, or I'm actually fairly active on Instagram and on Facebook. So you can follow me at waymaker.yeg on Instagram and Waymaker Developments on Facebook, or my personal accounts right here. And that's it for me.
Amazing. Thank you, Aurora. That was
Yeah.
a really great presentation, the economics, I guess, fundamentals of Edmonton and Alberta in general. And these are really cool projects that you're working on. And I can see you have like kind of a cookie color design. You change the facade, so that creates efficiencies as well, I believe.
Oh,
But and I also love like what you mentioned with high interest, high leverage loans and keeping reserve and kind of like keeping an eye on that, because yeah, mitigating risk is a big one as well. No, that was amazing. Thanks very much. We can all do like a virtual hands for Aurora, or
yeah.
if your camera is on. So we got a ton of questions in the chat, so I'll give priority to those, and then we'll go to people who have their hands up. So first question is from Ali. That's not me, the other Ali. I've heard that CMHC sometimes uses a higher vacancy rate up to 10% for underwriting buildings. If that's correct, does it indicate a potential oversupply of these units in the future?
Okay. The answer is I like honestly, the underwriting for CMHC really does vary. And it sucks to say this, but that's the truth. Sometimes it's the luck of the draw. Whoever you get for your underwriter, unfortunately, is kind of who you are at the mercy of. And I was actually like, who is this Ali? Do you know my story about my 10% vacancy? Because I can honestly tell you, this is a true story. So the Covenant, the Embark, the inside lot that we developed. So we had it at 5% vacancy when we put in our underwriting through our broker. And when it went to CMHC, they were like, all of your income and expenses look good because it was based on appraised value, but we're changing your vacancy rate to 10%. And I was like, 10%? Like, what part of Canada do you live in? Like, where do you see 10% vacancy rates right now? Anyway, long story short, we said we were actually using your data because the CMHC, the vacancy rates that your underwriters use and your appraisers use are CMHC data. So we were like, where are you getting 10% from? We had a lot of back and forth, and there really just was no budging when it came to these vacancy rates. Now, 6 weeks later, 6 to 8 weeks later, I had another project right around that area, and the vacancy rate that they accepted was like 2.5%. So again, such variance between what CMHC will say is acceptable in terms of the underwriting. Do I think there will be an oversupply in the future? Again, I don't have a crystal ball. However, just with what I was showing you guys in terms of the rate of migration and the people that are coming here for all the, the good reasons that we talked about, I do think that we're not even close to the targets that the city has in terms of housing, and the targets that we would like to hit. I'm going to advise you guys, because I know I a lot of numbers and a lot of data here, is that ATB actually does a really good comprehensive report about Alberta, and there's a huge focus on affordability, and it's called Chasing Affordability, and I'll probably send the link to Ali to share with you guys. But that is why people are moving here, and I think that that will continue to happen over the next few years. At this point, I'm not as concerned with oversupply here in Edmonton.
No, that's great. Just quick question on that. I guess I'm jumping one of the questions here, but I think it's fitting to ask that here. Is parking requirement. What are the parking requirements for these 8
We don't
units?
have any.
Okay, so
We
those 4 that you put there is basically your decision.
That's
So
right.
for your interior 8 unit,
Mhm.
how many parking spots did you have?
4. Still, we have 4 single garages at the back.
4, so you managed 4, and the other one that you had, the underwriter used the lower vacancy also had 4 parking spots.
Yeah. Yeah.
Okay, so there was nothing like really different between them, like design or parking or something that would
Oh,
trigger them
not
to
at
use.
all. And our appraised values, again, like again, like the CMHC rate for vacancy that they published was sitting in the twos, like 2.5, 2.8, but we went with a more conservative number at 5%, but then they changed it to 10%. So again, it's the luck of the draw, unfortunately, for some of these things. So hence another pointer that there are no guarantees necessarily when it's CMHC. If people are telling you, oh, it's only 5% down payment and you could get this, I would be a bit cautious about who you're having those conversations with. Either it's, like the promotion, or the fact that they've never, or maybe they haven't gone through these applications more than once to know that there's so much variability with that. So you have to be really prepared with the good and the bad with CMHC applications.
Awesome. The next question in the line here, and then I'll go to some of the hands up. Ada is asking, how do I find a builder? That's a very great question.
Um,
And
so I think if you are, I think Ada, so if you are like so one of them is actually on Facebook. There's like some of the groups there in Edmonton that you could join, and you could look for reputable builders that way. Another one is there's actually an association here, and I'm a member of it. It's called IDEA. I don't know if you remember that, Ali. Infill Development of Edmonton Association. So that is a great group to get connected with, because you will find really reputable movers and shakers in Edmonton. So you find builders, developers, suppliers, appraisers, quantity surveyors, etc. So that's a really good group, and that's probably a good place, Ada, to start. Again, also if you are in a investor group, you'll know people from Edmonton, and ask them. So
And I would also say like just general like finding trades or contractors and whatnot, consultants, referrals. It's my preferred way, and that's why I have this group. You can always post in the group, depending on where you are, if you're in Edmonton or wherever, and
mhm.
the people in this group, they're specifically focused on development. So I'm sure everybody have some people that they work with. And another one is like if you find one good consultant or one good trade, the referrals from those ones are likely to be good as well, because people tend to work with people that are similar to them. So that's another tip that you can use for finding people, and then always check referrals.
Yeah, like references. Yeah, yeah, yeah,
Actually
exactly.
funny, like I got a referral one time from a consultant, put it on their in their proposal, and then I called them and they're like, absolutely hell no, I would not work with them again. I'm like, they probably forgot to check with that reference before they list they didn't put the number and stuff, but it was one of the projects. But I
Yeah,
also noticed that later that they didn't have the details of that project, but I
yeah.
just that one and I just Googled and I found who they are and just called the company. And I said, like, did you work with this consultant? And they're like, yeah. I'm like, would you recommend? I was like, hell no. It's like, okay, that's good to know.
Oops,
Uh,
forgot to remove that from the list.
I
Yeah,
know.
no, totally great point. That's a great point.
Okay. Siriari, we'll take one live question and then we go back to the chat.
Hello. Hi, Aurora.
See you.
Hi, yeah, I can hear you.
Yes, yes, very nice presentation.
Oh,
Yes,
cool. Thank
very,
you.
very nice. Yeah, your buildings look so beautiful.
Thank you.
Yeah, so my question is like, what's cap rate you're projecting on a CHMC performer? And second question is, what is your valuation? Like for 8plex, let's say around $2.2 million, $2.1 million in that, like what's your ballpark kind of like the corner lots and the middle lots? Let's say, yeah, 8plex Edmonton selling around $2.2 million to 2.1 to 2.2 if you are buying like as a buyer.
Right. Okay.
But you are building, yeah.
Okay, so I'm gonna break that down. So the first part is cap rate. So well, typically, again, honestly, right now it doesn't matter as much. However, like the cap rate to expect is around 5.1% for these new
And
construction.
the DSCR is 1.1 and above.
Correct. So if you're going through CMHC, the debt service credit ratio, for those of you guys who don't know, is 1.1. Again, that's really low. Again, man, we could always just talk about CMHC. I don't want to go down that rabbit hole.
Yeah, no, I'm gonna have a broker or lender, someone, a CMHC specialist at some point.
Yeah.
Recent changes, but yeah, go ahead.
Yeah,
And
so it's a low rate, which means, yes, you can easily achieve it because 1.1 debt service credit ratio just means you need to make 10% more in terms of your income versus your expenses. So your spread is only 10%. Conventional loans for construction, if you were to go to down that route, you would need at least about like 1.3%. So yes, debt service credit ratio of 1.1 if you're going through CMHC construction loan. And then the other part about the price. The price will vary. Honestly, it depends on so many things, like the lot size, how big are you building, the design, the materials you use, etc. So it's really, really difficult to say that this is the price point. However, for valuation, so one of the projects that we actually just closed on last month, so the total cost for that was sitting around 3.37, and that's with a developer fee. So that wasn't done through a partnership. I'm actually building it for somebody, and I am charging a development fee, and at the end of the day, they basically get a turnkey property and they own 100% of the equity. So with the developer fee, they're sitting around like 3.75. Now the valuation came back at 2.57. So that's pretty good, I would say, in terms of what that lift that you get by building it with a developer versus buying it.
So cost per door for 8plex is around 300,000. Like if you're buying a turnkey 8plex, kind of.
It depends. I'm sorry. That's going to be my answer today. It really, really, really depends. So in terms of valuation, that's the spread that I can give you based on.
Yeah, that depends on location, right? Location and type of finishing and all these things. The cost per door.
So
Just like any other builder, it all depends. Yeah.
Thank you. Thank you, Aurora. Thank you so much.
Thanks, Martin. Good to see you, man.
Yeah, what's going on, Ali? What's going on, Aurora? Great to see you too.
Yeah, nice to see you again.
Yeah, no, absolutely. Thank you. I really appreciate the presentation. I just have two quick questions. One of them being, Aurora, how did you end up, choosing a unit as the go-to design? Because you've done a few of these. I'm just curious why specifically 8. And then the second question is regarding what are some of your favorite strategy to find land at a price that works for you? Because obviously there's a lot of developers looking for the same thing. So what are some of your ways of staying competitive?
Yeah, no, awesome. So why 8? Again, from a feasibility, when we did the calculation for project feasibility, anything less than that just wasn't as attractive, because remember, you're probably going to pay the same amount of soft costs. So you're going to pay fairly much the same amount of broker fees, lender fees, fees for your reports, all these things, and get less number of units, so less revenue, less rental. So the numbers aren't as attractive. So that was one from a numbers perspective. Number two, again, looking at the bylaw allows me to do 8. So I'm like, I'm going to go highest and best use. So long as I have the right land lot size, I'm going to go for that. Why make it more difficult for myself? I know I could do 8 at minimum, and that number works really nicely for me when I plug it in the analysis. So that's what we do. And now, as far as finding land, so before the bylaw, we only really looked at corner lots because that's what allowed us to do the 8 units. So that was like prime real estate. Even before there was a lot of attention to Edmonton, everyone was eating that up. So that was really tricky. Now that the bylaw has passed, there's more lots available. So yes, the competition is still steep. The market is hot. There's not a lot of inventory. So how I find properties is that definitely through relationships. Like that's the thing that I can say. So now I'm in a good position where deals do come to me. I get a lot of off market. I still buy on MLS, don't get me wrong. If it makes sense, I'll buy there, but I get like off market. And then the other thing is like I make friends with all my neighbors, because in that community, I've already done my analysis, right? I like this neighborhood. So I make it known to everybody. I like this neighborhood. If you're selling, please call me first. And I've actually I bought that way probably 3-4 times over the last 7 years. So yeah.
How much do these lots go for actually? Like how much do you pay for the lots? Corner lot, north lot? I know it
It
depends. What's the
really,
range?
really
The
depends.
more recent ones, like
So if you're up, like you saw the average home prices now in Edmonton. So like a 50 by 150 lot, that's usually my favorite size. For lots, I think for interior lots, you're depending on the area. If you're looking at entry point, you're probably looking at the high 300s now, in a community that I would like to build. You can go lower, but that's not a community I would be interested in. It's a little too far down the gentrification, scale that I don't want to mess around with that. And then corner lots, you probably would be looking at adding another 50, 60, 70K. Sometimes it depends on also on the condition of the house. So if the house is nicer and they know it's a corner lot, you're paying a premium price for it. So.
no, that's just for everyone to get an idea of the scale of the prices, because like those numbers in like GTA, it's a joke. Like you can't even get,
Yeah.
what to get with that. But okay, no, that's awesome. Next question in the chat, Manny was asking, do you mainly build 2-bedroom units?
So the main floor is 3 bedrooms, and then the basement we do 2 bedrooms. Other developers, again, I think it's like knowing your end user, I guess. Other developers or builders do 1 bedroom basement suites. I prefer doing 2 bedrooms, and then other developers like to do garage suites. From a numbers perspective, I don't love garage suites because of how expensive it is. But if it wasn't that expensive, I'd be building garage suites all day long too, because tenants love living in garage suites. It's a cool setup actually. But I do not, I don't do 2-bedroom main floor suites. I think you'll see some other builders as well. They do like the corner units have 3 bedrooms. And then the inside units are a little bit squished, and they do 2-bedroom or 2 masters. I don't do that. I like the 3 bedrooms for the main floors all the time.
What's the square footage of these units?
My main floor is around 1,300 square foot. And then the basement suites, they do vary. But typically it's around like 650.
Okay, yeah, no, that's really good size. And what do you get for rents from these units?
It will vary. I feel like I should like, it depends.
The ones that showed us, like, for example, just so that people get an idea of like what the rent ranges are for these properties.
Okay, I will do my best. So that
The
first
last
one
unit
that
you
I
looked, what were those rents?
the first one that I showed you guys, so something like that would rent for about 2,100, the main floor, 2,100 or even 2,000, 2,050 without utilities. And then the garage you could rent separately for anywhere between $125 per month for a single to $150 for a single. Now, what's really cool is that when I put that application in for that corner unit, on my appraisal and on my application with CMHC, my rent rates at that time was, I think it was like 2,000 or 2,025 with utilities. That's
Oh.
how my project was calculated, 18 months ago or 16 months ago. Now I can rent it for 2,100, 2,050 without utilities. This is the speed and the pace of the rising market here in Edmonton.
What the basement go for, the affordable ones?
Because it's a 2-bedroom, we could rent that for about like 1,250 without utilities.
Okay. No, that's awesome. Yeah. Those numbers like 2,100 for a brand new 3-bed, 2 baths, I guess, 2.5 bath unit. That's unbelievable. I mean, that's what attracts people there. Because
Yeah.
in Toronto, you can probably get a bachelor condo with that. No, awesome. And Manny has another question. What are typical interest rates for MLI Select loans?
Okay, so it depends. No, I'm kidding. But it does. It really does
It
depend.
really does. Like literally,
That's what
like,
Ali knows. It really does depend
it changes
on what
daily. So
day you sign your papers, to be honest with you. So
that's a
I'll break
whole
it.
different roller coaster you get on when you go through the financing.
It's really true, but I'll break it down to you. So construction loan is based on the Bank of Canada rates. So whatever the Bank of Canada rates, we just had a, decrease. It's usually that plus, depending on what your lender issues for you. But the typical range I've seen for my loans are Bank of Canada rate plus 0.5 to 2%. That's been my construction loan.
You mean, that's what you mean, right? Prime.
Right, sorry, yeah, prime plus 0.5 to 2%. And then your takeout loan, which is kind of like the loan once a construction is, you can't be on a construction loan forever and ever. Once your building is done, you move into a takeout or a term out loan. That will be based on the Canada mortgage bond rates, whatever that rate is. At that time you sign, it's usually that plus a bit of spread. Ali knows this. So, and Imelda knows this. So there you go.
It changes daily, and it's the biggest suspense of your life from the time you get your certificate of insurance until you lock in that rate, and you're like watching it every day, and it goes up and down. Like sometimes like 10 basis points or whatever, which is basically 0.1, and that would change your loan amount.
Yeah.
And all that. So
yeah,
big, like last year we were doing a finance with CMHC, and that was the time when everything was like, going up, quarter point in a day or in a week. So yeah, I'm pretty sure I got a lot more gray hair. Just that 2 months between when you get your certificate and you lock in your rate.
yeah.
And that we will leave that for the session when we bring a CMHC specialist of like how that works, the timing and the steps that goes through. but there's a bit of a gap from when CMHC approves your loan from the time the lender actually locks in the rate that you have. And that's one of the risks that probably for another session, when you start your project, from time you start, from time you finish and you lock in, if you were doing this last year, your project could not even be feasible anymore based on the interest rates that was happening. So those are some of the risks, but we'll leave that for another session. I will put a link in the chat shortly that you can check the CMB rate, the Canadian mortgage bond rate. And then there's a spread. So there's CMB plus something. And that something depends on the size of the loan, the location, the project, the lender, the borrower, all that stuff. But it's somewhere, I would say, between 0.7 to 1 point something, like 0.7 to 1 kind of thing. So it's CMB plus that. Because the most recent one I got quoted last week was CMB plus 0.7. I don't know what you guys have been quoted recently.
Yeah, so it's I'd agree with you based on that range. It's CMB plus 80 to 100 basis points. These smaller loans and these $2 million, anything less than 10 million is considered a small loan. And these small loans, typically the spread is a little bit higher, just so you know. So I typically just prepare for CMB plus, again, anywhere between 80 to 100 basis points.
Yeah, I think right now, like today, CMB was 3.6. So if today you were getting a loan of like around 3 million, I would say you're probably looking at CMB plus 0.8-ish. So 3.6 plus 0.8, that's you're looking at 4.2%.
Yeah.
But CMB could jump 0.2% tomorrow. Nobody knows.
Yeah. Yeah.
That's the beauty of doing commercial real estate.
Yeah, you gotta be pretty hard. Yeah.
Okay, so I'm gonna go a little quicker through the questions. Ali is asking, what's the minimum land size requirement? I think you kind of mentioned it, 50 by 150 is what you like. Munaz is asking, what are the best communities for this type of projects?
Like in Edmonton? Oh man, that's like that's not gonna be a 2-minute answer. I think it's best that you connect with an investor-focused realtor in Edmonton. Like I think every pocket, or sorry, like every kind of corner in Edmonton, you'd be able to find good communities. So I like to go on the northwest side. I like the south side. I like the west side. And the west side, you guys probably saw, I said Glenwood was one. Crestwood is another one that I like. But again, they all have their own advantages and disadvantages. Crestwood, price point there for the lot, you're looking at 600K now, 600 to 650K. Glenwood, you're probably still looking at, again, like the 300s. It also depends on the type of tenant demographic that you want to attract. So there's so many, when I say it depends, it really depends. How much cash do you have? How much liquidity do you have? How much net worth do you have? So I won't be able to answer that in a 2-minute answer, Munez, but I think in terms of communities, there's a lot of communities in Edmonton, and I think connecting with an investor-focused realtor in Edmonton is a good place to start.
Yeah, I think I would say like just from, I'm sure Edmonton is still the same, but from when I was looking there and I was living there, it's very, very important. Like one street to the next street could be completely different. So you definitely want to work with someone who's familiar with the areas and which are the nice pockets and which are not the nice pockets.
Yeah.
Last one is a comment from Imelda. Yeah, of course, you will need to be praying hard on the day you're submitting your application to CMHC. That was regarding the rates. So yeah, that's very true. Amy, good to see you.
Hi, thank you. That was an amazing presentation. Loads of information there, so thank you. I have a super quick question and a really novice one, I guess, because I'm quite new to this. But when you're purchasing land and an older house to knock down, assuming that that's a residential house and you have to wait and apply for the CMHC development loan, are you just kind of purchasing that like, you know, with cash to kind of until you get that loan and private money, and how long does that wait usually take?
Oh, that's an excellent question. So I actually prefer to use leverage still when you're buying the residential lot. So some of my criteria is, you know, you could buy a demolished land already and say, okay, here you go, you're ready to build, whatever, whenever you get your permits, whenever you get your funding. That's okay too, but I prefer to have a property there, because what we typically do is while we wait for the permitting and while we wait for the financing is if it's habitable and in a fairly decent shape, we rent it out so that you're not carrying as much, and we actually go and get a mortgage. Depending on who my partner is or who my client is that we're doing this with, if they can qualify for A lenders, awesome, let's do it. But if they can't, there's also the ability to go through private mortgages, and I've actually taken such a liking to private mortgages. Like, they may seem scary because your interest rates are like double digits, but the flexibility with the terms, like you have a completely open term, so you are not paying for any penalties when you're ready to build, because sometimes the build, you know, you can get a range of like, oh, you expect to get funding at such and such a time. Sometimes it doesn't happen. Sometimes it's sooner, sometimes it's later. So you have that flexibility. And when you get conventional residential mortgages, you're paying, even if you get a variable rate, you're going to be paying them at minimum 3 times your interest rates anyway. So when I look at my math, I'm like, the ease of getting these mortgages, not a whole lot of questions. And typically it's interest only payments too for these private loans. It actually does just kind of balance out, and it also almost just becomes on like what my clients or what my partners prefer and what loan they can get. But really at the end of the day, it's like it's a rounding error.
And how long is the wait usually on average to get the CMHC development loan?
Okay. You guys will know what I can
It
say.
depends.
But you know, the reason being is that CMHC just announced another change. Like, I don't know if you guys you knew that, right? You guys heard that, Ali? June 19th, yesterday. Like
I got like 10% more gray hair in the past 2 weeks of trying to squeeze in these applications before the rules.
Yes. So they just made some changes. So whenever CMHC makes changes, there is that ripple effect in terms of like how quickly they can process things, because as what we discussed earlier, there's a learning curve for the brokers, there's a learning curve for the lenders, there's a learning curve for the CMHC underwriters, et cetera, et cetera, et cetera. So
No, I gotta stop you there. There is no learning curve for CMC. They never learn. They just stay.
yes. Touché, that is true. They just like to give us like headaches.
They never learn.
Yeah, I know, they just seem to make some of these problems worse. But I'll use some point of reference. So the beginning of this year, you know, when we submitted, by like 6 weeks, we were able to get a COI. So very quick. Now with this announcement, I rushed 3 applications yesterday. Ali rushed 1, and we're not only ones doing that. Oh, you rushed 2. I rushed 3 yesterday because yesterday was the cutoff. Every investor developer was doing the same thing. So you're going to see like a bottleneck again with CMHC. So what we anticipate is it is going to slow down a little bit again. Talking to my broker, they're saying maybe like 3 months, maybe 4 months now for a COI.
Yeah, I heard like before this change, they were actually down to like 3 to 4 weeks.
Yeah, I've heard people, yeah, exactly, get that. Imelda said
size and all that, but like I think right now it's probably going to be back at 3 to 4 months.
Yeah.
Yeah, Imelda is saying like they had an experience like a week to get a COI. That must be the record at all times. And
I think Imelda knows somebody in CMHC.
yeah,
Imelda needs to like
know, or whatever, she might, I might have to hire Imelda to submit our applications. But it's, I guess one my because last year when things were like kind of not super crazy, yeah, I should say I was praying hard. I'm sure your prayers have been answered very quickly. Yeah, I think we had like a couple of weeks, but it was really is like the wait time for the underwriter to pick up your file. And sometimes depending on the loan size, if you're like less than 2 million or whatever, like it gets done very quickly. But from what I understand is like if the loan size is above 5 million, there's another layer of like oversight for underwriters. And if it's above 10 million, it's like major loans. And if you're like above 50 million or whatever, there's like a whole different process. So they look at the risk of the loan and it goes through different channels. But I guess for the loan sizes that we're talking about, you would probably budget like 3 to 4 months right now moving forward.
Yeah, I would agree with that.
The recent changes, there's probably going to be less applications anyways. So, because they totally messed up the program.
Yeah, definitely. I know. For Ontario and BC and the other provinces. So the thing here in Edmonton is, again, we could still put it in under affordability, which is another unfair advantage, because other provinces, I know you guys are putting it through the energy efficiency, whereas for us, it was much simpler for us to go under affordability, and that hasn't changed. So on our end, it's kind of like business as usual, but I can see how this is going to hurt a lot of builders, developers, and it really, unfortunately, negatively impact how like construction starts in other provinces, which is crazy.
Yeah.
Madness.
Ontario is probably just gonna be a hard break on like full stop on rental development because it makes sense with affordability in Ontario. But I'm curious, like, why did you have to rush for the deadline? Because you're not using energy efficiency.
Well, actually, because we always want to be extra, we actually did our design like over time. We just continue to refine it. We actually came to a really good design where we were able to get 100 points under energy efficiency. So and then June 6th or June 7th, they announced that, and we were like, oh my God. And we had actually 4 projects that would have qualified for that, but we were only able to move forward with 3 just because we weren't ready on the other side. Because you have to have all your reports, you have to have your like this and this and that. Anyway, it's unfortunate. However, yeah, and so that's why we rushed that in, because we finally had a really cool design where we incorporated a lot of energy efficiency upgrades.
Yeah, I saw in one of your photos you had like spray foam insulation and all that.
Yeah. We have ICF for our we use insulated concrete form. Yeah.
You're using like air tightness kind of like design and all that stuff. So that's awesome.
Not for everything, because like as much as we would love to use ICF for everything, it's just way too expensive. But yeah, we do incorporate some of those, again, design and just different materials to still manage the project feasibility and then try to optimize on the points where we could. But yeah, we'll have to shift again now that they changed it. But yeah, we were able to season 3.
Even if you would have missed the deadline, you would still qualify under affordability.
Exactly. On our end,
for us, it was like literally a gun at our head.
I know.
To miss the deadline, the whole project will not be viable. We are at the end of the project, so it was a do or die kind of situation to get it done.
I know. It's not as dramatic here, but definitely we were like, man, if we could get those points, it would make a lot of sense for us. So for us, it's still going to always be affordability is our number one. And if we have partners that and clients that want to try and up the energy efficiency side, we're able to also deliver those kinds of products.
No, that's awesome. And actually, Ada is asking what are the changes. So MLI Select program had this point system, and to get the best terms, the 50 years and up to 95% loan to cost and 1.1 DCR, and mainly the 50-year amortization, you would have to get 100 points. and you could achieve 100 points based on energy efficiency. But they changed the rules that now you can only get up to 50 points on energy efficiency. So you need, if you want to get 50-year amortization, you need to basically include some affordability in your application to get the 100 points. If you just use energy efficiency, now you're limited to 40 years instead of 50 years. But that 10 years makes a big difference in your loan amount because you're still limited on your debt coverage ratio. I'll leave it at that. Like we'll have someone that specializes in MLI Select program on another session. Okay, last call for questions before we wrap this part of the evening. This was really great, like one of the best interactive sessions we've had. So thank you, Aurora. Manny, go ahead.
Yeah, Eric, can I rent one of your units? I think I'm gonna move to Edmonton.
Yeah, it's true. It's honestly, I mean, the winters are cold, let me tell you. But if you can vacation, elsewhere, you can actually afford to vacation a couple of times a year. So that may be the toss-up.
It's funny. That was literally what I was talking to someone yesterday. I'm like, living in Alberta, you actually have disposable, income to go on a vacation. When you live in Toronto, you don't know. Your money just evaporates.
Yeah.
Yeah, that's a really good point. So it kind of it's the trade-off for the weather there that you can actually escape. But thank you, Aurora, again. This was really awesome. Thank you for your time. Great projects. You're a wealth of knowledge and very experienced. You're way too humble for what you do and your knowledge level. So thank you for being here. So normally we would kind of open it up for conversations. Anybody wants to introduce themselves if they're new to the group. So I know it's 9 o'clock here and 7 p.m. in Edmonton. So for anyone who wants to stick around, we also do like deal presentations, but I don't know if anybody has a deal to present. I didn't get any messages or requests from people. I guess Aurora always has deals, so if you guys know where to find her now, so you connect with her. But so we just open it up. If anybody wants to come on and introduce themselves, I'm okay to stick around. We'll kind of stop recording from here and we'll just hang out and network. Again, thanks for being here, everyone.